Thanks for joining us. I'm Marlin Bohling with you with a look at your ag commodity trade. And this particular time of this particular day every week, we like to turn our attention to our in-studio guest. We have Chris Swift with us, and he is with Swift Trading Incorporated, based in Nashville, just down the street, literally, almost. So always a treat to have you stop by and talk about the markets firsthand.
Yeah, appreciate that.
And
sure do.
I hope you had a good Thanksgiving.
Yes, I did. And you?
Definitely did, yeah.
Good,
definitely did. Had a chance to see a little bit of the countryside, and I was surprised when you get into the Mid-South how many soybeans were out in the field.
Yeah, there's still a few of them out there, isn't it?
I was kind of amazed at that, yeah. Still out there today, I believe.
Quail hunters will like that.
Okay. Let's talk about this grain trade this morning. So we came in this morning and USDA had an announcement of 120,000 tons of soft wheat to Egypt. And everybody goes, all right, so is this new or is this the one from Thanksgiving? What is it? Nobody can give me an answer.
And I don't know either.
You don't know either?
I saw that wheat was up this morning while beans were down 12, 13 when I got up, and corn pretty much unchanged on the day, but wheat up a little bit. But I don't know that really makes a great deal of difference right now.
A lot of confusion about that announcement this morning. So anyway, that remains to be seen here. Okay, let's talk about the markets. We'll walk through the corn and soybean and wheat trade right now and get everybody updated on prices. So here we go. As we take a look at what's going on here with the corn board, we're down 3 right now at $3.56 per bushel. That happens to be right on the low of the day, Chris. The March down 2.5, and also on the low of the day. Let's take a look at our soybean market this morning. And as you alluded to, we have some steep drops here in the soybean trade. Down 16.5 now at 864.5, and we have it actually just one tick within its low of the day. The March contract down 16.5 at 878.25. Let's look at the wheat, though. The wheat had firmed up this morning. Last time we checked, it was up 6. Now it is coming off of that now. December Chicago wheat 2 3/4 higher at 502.5 per bushel. So it's still within about a penny of its low of the day. Meanwhile, on the Kansas City market, we have that December contract now a penny higher at 462.25. So the wheat market, at least, is coming back down to earth after an early strong start there this morning. And let's check out the Minneapolis trade real quickly here, where we have December 2 3/4 higher. It's at 577. Okay, we're getting toward the end of the month. Does that present some issues on the grain trade?
I don't really think so. Not right offhand. I think there's probably the bigger picture still involved right here of some end producers wanting to make some sales before the end of the year. But last month of the quarter coming up and finishing off this one, there hadn't been a lot of movement in the grain market, and there sure hadn't been a lot of movement in price. So I think traders are waiting for something to kind of break loose, maybe on the G20 summit meeting that's coming up. Maybe it'll be slow until we get some more definitives out of that.
Once you get into December, and we're all hearing about the good crop conditions in Brazil and Argentina, relatively speaking, so far. But it makes you wonder if the end users are out there just banking on the fact that they know there will be a lot of cash sales made right before the end of the year or right after, one or the other, and there will be a lot of cash grain coming to market.
Yes, there will be.
Okay, we'll pause for a quick little break, and then we will come back, and we'll talk about our livestock trade here on a Monday when we return after this. And we're back with you talking with Chris Swift of Swift Trading Incorporated in Nashville. He's in studio right now. Time to take a look at our livestock prices. And Chris, let's go right to the board. Take a look at live cattle here first. Currently, you have your December contract down 17 cents. We're at 116.92 per hundredweight. Now, we opened up relatively flat, and we're just a touch weaker here. We have February down 20 cents. We're now at 120.72 per hundredweight, within about a dime or so of our low of the day. But the entire trading range is only 60 cents wide, so it's really not moving a whole lot today at all. If you look at feeder cattle, we'll start with the January contract, and we're up a nickel at 149.43. March up 13 at 146.05. April up 30 at 146.55. Now, a little firmer tone on the feeders. We have a little bit weaker tone on the live cattle trade, and I hearken back to the old cattle and feed report. I call it the old report, but it came out right before Thanksgiving. And I believe we have those numbers from that cattle on feed report, and on the placement number, that caught a lot of attention because it was so low at 94%. Is that what's supporting the feeders relative to the live cattle this morning?
It's possible. I think that what we see there, the first 2 weeks of October were really wet and sloppy. Maybe that's some of it. Some have alluded to the really heavy placements in July and August. We had a little bit of drought situation, so we placed some lighter weight animals. They would have been another 100, 120 pounds heavier by now, so they would have been just as prime feeders, and they're not here. They're already either placed or gone somewhere backgrounding to finish out, but they're no longer available as feeder cattle.
What about lower corn today?
I don't think that has anything to do with it. Feed costs have been so stable that, and you've got such abundance of silage out there that I don't think corn prices right now are going to have much impact.
So Friday afternoon, the wholesale beef trade, the beef cutout values were a little bit weaker, but I keep hearing more and more talk about how there is quite a bit of demand for the higher-priced beef cuts this year for maybe Christmas holiday celebrations.
They get the rib trade, and that's what they kind of considers the rib trade coming in. And we bought a full round of animals on last week to start slaughter for this week here, and they'll run that for another full week, and trying to get that product out to finish up for whatever remaining demand there is before Christmas.
I guess the question is the buying already done at the feedlot level for that?
Probably not all of it. No, probably not all of it.
Kind
You probably still got this full week right here, and they ended up trading 17 for cattle last week.
Okay.
So everybody's kind of looking for maybe that or a little bit better before the week's over with.
Okay, now on the hogs this morning, let's take a look at what the lean hog market is doing for futures. And currently, December down 88, and February still down $1.08 at 66.75 this morning. A lot of weakness in that lean hog trade. How come this morning?
I'm not real sure because it was real strong last week. We put on close to $10 last week in the hog market. So to take off $1 today is really not that much to it. But we keep hearing more and more issues coming out of China from the African swine flu, and that's got our radar up and alert, and we're keeping pretty close tabs on this market.
On the hog chart, we had that big double top and took it out.
New contract ties across the board.
But now we're selling off ever since, so it's kind of a caution flag there. So just wanted to point that out. All right, well, thank you, Chris, for talking with us about the markets here on a Monday. I appreciate it very much.
Absolutely.
Chris Swift of Swift Trading Incorporated in Nashville.
On a Monday, a cold Monday here in Nashville as well.
Kind of blustery out there.
Yeah, thanks for making your way to the studio. All right, thank you so much, gentlemen.